Okay, so I'm quite intrigued by this budget. Uh, that overall it's been a very, I think, game-changing budget from the personal finance side, because after a long time the personal taxes have been tinkered with, the capital gain has been tinkered with. What I mean to say. Secondly, I'll come to the details, but secondly, obviously the shift has been towards the government wanting people to move towards the new regime. So those are the two main key, I think, highlights of the budget. Now, first coming to the capital gains part, and as now we have seen that the long-term capital gains has been increased after a long time, and which was completely unexpected to say the least, from 10% to 12.5%. Even the long-term capital gain has been made uniform rate of 12.5% across all asset classes. So that's a big takeaway. And secondly, the short-term capital gain has been increased to 15 to 20%. So, which is quite a move, and I feel the reason for that the government has done that is one of the reasons could be to mellow down the bullishness which was rampant in the equity markets, which we've seen. So they've just done that, but honestly, I don't feel that in the long run it really matters to people who are long-term investors and who are investing with a fundamental motive in mind. So that is the other one. Even the equity sides, the STT rates have been increased because there are a lot of speculation in the futures and options going on, derivatives. So that has been increased to again let people feel the heat of the taxation before they take calls in this dangerous part of F&O. So that's one aspect. On the second part is the shift towards new regime, and they have again modified favorably the tax slabs for the new regime accordingly, and they made a back of the hand calculation that people shifting into the new regime would benefit by 17,500 rupees if they were to do that from the old regime, if they were to adopt the new regime slabs which are there. And in the new regime, one more element of attractiveness has been made by increasing the standard deduction, which was earlier at 50,000 to 75,000 for salaried employees, and this benefit is only available in the new regime, not in the old regime, where still the standard deduction prevails at 50,000. So I think those are the two key takeaways, but still why I said intriguing is because there's so much done on the macro side, on the economy side, to boost the country's growth and give so much opportunities that if those sectors benefit, will our capital markets improve, there'll be more participation of the retail investors, and all these things which we call capital gains and the short-term, long-term, or the new tax, old tax would probably mellow in the time to come, because everybody will be well off, everybody will be on the right path, and everybody will prosper.